Welcome to Prime Business. I am Pius Kojo Baka. To our very first story, economist Professor Patrick Isuming is advising government against returning to the capital market to borrow following the conclusion of the debt negotiations with external creditors. Speaking earlier on the marketplace, Professor Isuming said it will be immature to go back to the capital market to borrow in these current economic difficulties.
I think that for this one, we should probably say thanks but no thanks to those who are encouraging and urging us to think about returning to the international capital market. First of all, I think practically we are not even anywhere near close that, because you recall that when we signed the IMF program, it debarred us from taking on additional commercial debt until the program is finished. So any discussion about formalizing and returning to the capital market is a little premature. And frankly, that's not what you should be thinking at all. We should be thinking about at this moment.
All right.
I think the fact that the program, we seem to be nearing the end of the debt restructuring, it's actually the beginning of the work. It's not the end of it. Our economy is still having serious difficulties that we need to seek to address. And at this moment, that should be our focus, not to be thinking at all about returning to the capital market. It's not a simple matter of even listening to advice and going back. I think, don't forget that the credit rating agencies, have not upgraded us to anywhere near be able to return to the markets in the first place. And then, we have explicitly signed an agreement with the IMF that we don't plan to do that while we are in the program. And frankly, even if we were to return at this point, our credit worthiness is so low that we are going to pay a hefty premium to raise any funds. So, I'm very surprised that anybody would even want to bring this up. This is not something that we should even be contemplating at all.
In a significant step towards a more sustainable financial sector, the Chartered Institute of Bankers Ghana, Environmental Protection Agency, and the International Finance Corporation have joined forces to launch an environmental, social, and governance certification program. Here's more in this report.
Studies have shown that financial institutions are not immune to the environmental and social impacts of their activities. As environmental and social considerations become increasingly important, the risks become more pronounced. To this end, the Chartered Institute of Bankers believes that it is time to highlight the importance of a sustainable environment. Speaking to Joy Business after the launch of the Environmental, Social and Governance Certification Program, the Chief Executive Officer of the Chartered Institute of Bankers Ghana, Robert Jato, said the certification provides an opportunity to access affordable financing.
Developing your internal capacity is important, but it's also part of the agenda that presents opportunities for banks, because the ESG, if you go through this program, you see that there are opportunities really beyond compliance, right? And those opportunities could be anything related to financing that may be related to things that you must put in place even before you actually advance facilities to your business or corporate clients, right? But it's also an important thing, more from community perspective, but also from internal social perspective in terms of how do you treat employees, to how do you treat customers, to how do you source within your supply chain. So it's really important.
Recognizing the growing concern, the Bank of Ghana established the sustainable banking principles to guide the banking sector. However, effectively integrating sustainability requires a skilled and knowledgeable workforce. This is precisely where CIB Ghana and EPA's new programs comes in. The second Deputy Governor of the Bank of Ghana, Elsie Awaji, said there is more room for improvement to achieving environmental sustainability in the financial sector.
Among other things, the Corporate Governance Directive that we issued in 2018 for the banking sector, the Fit and Proper Persons Directive, which we issued in 2019, that helps us streamline and raise the standards for who can be on the boards of banks and who can be in senior management roles, as well as who can be shareholders of banks, all help to ensure that there are higher standards of governance in banks. We also launched the Corporate Governance Directive for rural and community banks in 2021. And in 2022, we launched the Corporate Governance Disclosure Directive.
SG Bank Ghana is reaffirming its commitment to support the growth of Ghanaian small and medium-sized enterprises with an agreement to secure $25 million facility from the IFC, a member of the World Bank Group. Now, according to the bank, this fund is dedicated to women-led small businesses as a form of empowerment to boost the operations. Managing Director for SG Bank, Hakeem Hosani, has been explaining to Joy Business after a short ceremony to sign the partnership.
The partnership with the International Finance Corporation forms part of moves by the SG Bank to redirect support to key sectors of the Ghanaian economy. The bank has secured a $25 million fund from the IFC, which is expected to be used for SME sector, as well as developing sustainable solutions for women-led businesses. Managing Director of SG Bank, Hakeem Hosani, believes the move will complement other initiatives undertaken to support growth of the economy.
Regional Ghana has demonstrated all over the years that we really have as the heart of our strategy the SMEs and the development of this corporate activity in Ghana, which is one of the pillars which supports the growth of the economy. No, we are continuing with the same path with a focus on the SMEs. Which I remind SG Ghana has grown its portfolio more than 3 times in the last 4 years, which demonstrates here again the focus that we have on this particular segment of our corporates and the importance that it has in the economy. We are continuing the same path. We have the same I would say, global strategy, I think, at different levels between SG as a bank and IFC as a financial institution.
Senior Country Manager of the IFC in Ghana, Carl Kelf, underscored the importance of the SME sector and reasons the IFC will continue to support their operations.
We provided financing for Society Generale of Ghana to support SMEs in general, but women-owned enterprises in particular. So this is a continued expansion with a $25 million line for support for SMEs, primarily women. Society Generale is a specific program to support women, so this aims to strengthen that. And this is part of supporting the Ghanaian banking sector as part of an increasing resilient recovery by the banking sector in support of access finance to SMEs in Ghana.
Through this collaboration, both partners are committed to empowering Ghanaian entrepreneurs and charting a course towards a sustainable and inclusive future.
On SME development, leading telecommunications company MTN Ghana has reiterated its commitment to leverage technology to address risks associated with lending to the small and medium-scale enterprise sector. Now, speaking at MTN Ghana Business Executive Breakfast Series on bridging the credit risk gap for SMEs, Chief Executive of Mobile Money Limited, Shaibu Haruna, noted that effective collaborations with lending institutions will enhance the current risk assessment. More in this report.
The practice of identifying, assessing, and mitigating potential risks associated with extending credit to individuals and businesses in the small and medium-scale sector has been a major hurdle for lending institutions. The introduction of credit reference bureaus by the Bank of Ghana has greatly improved credit risk assessment of potential loan applicants in the country. In the absence of a proper de-risking facility, some SMEs, especially those in the agri sector, are still handicapped. Speaking at MTN Ghana's Business Executive Breakfast Series on bridging the credit risk gap for SMEs, Chief Executive of Mobile Money Limited, Shaibu Haruna, noted that the use of technology and effective collaborations with lending institutions will enhance the current risk assessment regime.
For us in MTN, we believe that we have the technology that will enable us address the issues around the risk of default of customers. And this we are doing by using customer transaction data in order to be able to predict the ability to pay and also the risk around default. And based on their transaction behavior, we can profile them in terms of the levels of credit that we're able to provide them in partnership with the banks and other financial service providers.
Meanwhile, CEO of AS Farms and a panelist on the forum, Kwame Enimsumwa, called for a review of interest rates based on the credit ratings of entrepreneurs.
Once the credit scoring is in place, then I think the interest rates should be structured in a way that it actually reflects on your credit score. It shouldn't be a blanket score for everybody because you are going to this sector. But then individually, the credit score, the credit scoring and models for drafting it should include your credit rating, which will help drive the interest rates a bit low for us.
Chief Enterprise Business Officer at MTN, Angela Mensah-Poku, reiterated the telecom giant's commitment to collaborate with relevant stakeholders in developing solutions for the SME sector.
There's a lot more we can do when it comes to products and services by listening to our customers and making sure that we have deep insights that is reflective of our customers' needs. So my commitment is definitely that for SME Month, we won't just talk about it, we won't talk about the big English, but we'll bring more practical and collaborative solutions.
The topic for this edition of MTN Ghana's Executive Breakfast Series was Bridging the Credit Risk Gap for SMEs.
Now, government is working to roll out visa-free for more countries before the end of this year. It has also made significant progress on issuance of electronic visa in the coming months. The move is part of efforts to improve tourist visit and dollar inflow into the economy. Akwesi Ajiman is the Chief Executive of the Ghana Tourism Authority and has been speaking to my colleague George Yafe. And that's it for the bulletin. Do enjoy.
It is a game changer. I mean, just as South Africa put out their numbers, for example, last year, 2023, the entire year we had about 4,300 South Africans come to Ghana. As of May ending this year, we already have 7,500 South Africans. So that tells you that the visa is a bottleneck. The visa is a hindrance. And so we are working with the Ministry of Foreign Affairs, Ministry of Interior. As of today, for example, there is a retreat that we have been invited to come to on Friday the 14th. And that retreat is to look at the final document that is going to Cabinet. The President has promised that this year, under his watch, he will make sure that the e-visa is ready. And I believe him on his word, and we're taking it upon him, and we are working together with other agencies to make it happen. And so, believe you me, there are countries like Namibia, South Africa has shown the way that if we reciprocate, we will get the numbers. We are getting the numbers, they are getting their numbers, everybody is happy. So we will do so with other countries, and I believe that by December, when we are doing our December in GH, a lot of these things would have been cleared off.
Would it be targeted at just certain countries, or it will be open for all or something?
No, the e-visa is open for all, but it's just that making it easier for people to... That is separate from the free visa.
Yeah, I'm talking about the free visa.
The free visa will be targeted. I mean, I don't think we can have a free visa for everybody. Those things are mostly reciprocal. And so for countries like Bahamas, we have a reciprocal free visa arrangement. So when you are coming here, you don't need a visa. When they are coming, they don't need a visa. In the Caribbean, I think we've done that with almost all the countries and the islands in the Caribbean. We're moving into the rest of Africa and some other countries to make sure that the numbers look good. For us, the U.S. market is our number one, and so they are clamoring for the e-visa, and that is what we are trying to get out of the way as soon as possible.